Thanks, Fiona. Also, thanks, Sean. Obviously, we put this together relatively quickly over the last 3 to 4 days, and I'm glad that I could join you guys and all of the participants who are on with us to try to give a high-level overview of the Paycheck Protection Program. I know it's been in the media a lot lately, and Fiona's right. We have been so overwhelmed with traffic at the Boefly application site that we've actually turned it off to new applicants for now. So after this presentation, after this call, if you were to go to the Boefly website that houses this application, you won't be able to apply. I will make sure that as soon as we're turning our faucet back on and we've stabilized our tech, which we're anticipating will be in the next 24 to 48 hours, I will let Fiona and Sean know, and you guys can pass out kind of a system-wide email that, you know, the green light has been turned on. So I'm going to go through this relatively swiftly. I don't know if there's going to be an opportunity for questions. I think there might be. I will leave that to Fiona and Sean. So quick agenda. So, some good news if you're an existing SBA borrower. I'm not going to spend a lot of time on that. I'm going to spend the majority of my time on the actual PPP program and how it works, how the loan size is calculated, how the amount of forgiveness is calculated, and I'm going to skip that last part about how to get started for now. Quick overview about where everybody in the country stands. This is one of the fastest passed pieces of legislation ever. So just a quick overview. The Senate approved the CARES Act on March 25th. The House approved it on the 27th. The President signed it into law that same day. The SBA technically had 30 days to issue their guidelines, but they issued limited guidance 3 days later on the 30th. And last Friday was technically the first day that loans could be processed by banks. I say all that just to highlight that this is one of the fastest moving animals ever. $349 billion was authorized as part of this CARES Act for small business owners to get some relief and some payroll protection. Firstly, if you have an SBA loan as part of the CARES Act, you automatically are going to have the SBA cover the next 6 months of principal and interest payments. It's meant to be automatic. If you haven't already connected with your current SBA lender, I would encourage everyone on this call to make that the first thing that you do when we hang up, to make sure that those 6 months of interest and, principal and interest payments are going to be covered by the SBA. If you've already paid any loan payment towards an SBA loan on or after March 27th, your lender is actually required to inform you that you have the option of receiving that payment back or applying the loan payment to reduce the principal balance. It's true that in the last 8 days, Boefly has taken in over $2 billion of loan applications. One thing that people are hearing a lot about is this EIDL loan. That's an economic injury disaster loan. A quick note on the difference between these PPP loans and these EIDL loans. An EIDL loan is a loan that's issued directly by the Small Business Administration. It is not a new product. It is a loan product that has been around for years, and it is commonly used during tornadoes, hurricanes, natural disasters of the sort. There's no forgiveness feature, and one of the most important distinctions beyond that is that banks do not make that loan. I want to repeat that. Banks do not make EIDL loans. Those loans are exclusively issued directly by the SBA. And if you'd like to apply for an EIDL loan, there is only one place to do it, and that is SBA.gov. Again, if you want to apply for an EIDL loan, there's only one place to do it, and that is on the SBA.gov website. The PPP loan, this new product that is part of the SBA CARES legislation, is issued by banks, much like SBA 7A loans or 504 loans. That means that instead of having one potential lender, the SBA itself, there are thousands of potential lenders. So there are more aisles in the grocery store to shop for this loan. If you Google it, you'll find that last week, the SBA finalized a universal application for this product. And Boefly and other fintech firms have built a front end that allows people to apply digitally, where we will populate that PPP app for you. Here's to how you determine eligibility for this PPP loan. 1, you had to have been in business with at least $1 of payroll expense as of February 15th. 2, you have to have less than 500 employees. That is really it. Everyone's been impacted by COVID-19. The president has issued a federal disaster. Most governors have as well. So as long as you were in business on February 15th of this year with at least $1 of payroll expense and you have less than 500 employees, you qualify. Here's how the loan size is calculated. I'll get into a little more granularly, but first let me take a step back. And here's the thinking that the government had, that Congress had. You qualify, you are eligible for 2.5 times your average monthly payroll expense. What payroll includes is a broad definition, but let me repeat that. Look at your last 12 months, whatever your annual payroll was over the last 12 months, divide that by 12 to get your average monthly payroll, multiply that by 2.5, and that is your calculated loan size. It's done based on that equation. You don't get to opt for a certain amount of dollars that you want. It is totally based on your payroll over the last 12 months. So for example, if your annual payroll over the last 12 months was $600,000, that means that your average monthly payroll was $50,000, and your loan size is going to be $125,000, right? 2.5 times your average monthly payroll. Here's what's included in the definition of payroll for the purposes of calculating a PPP loan. All salaries up to $100,000. So if you have an employee who made $107,000 in a year, you're only going to be able to use $100,000 of that salary in the calculation of this PPP loan. Health insurance payments paid by an employer, state and local taxes, paid vacation and sick leave. If you as an owner of a company have a draw or pay yourself similar to the salaries of others, you can include up to $100,000. Any money paid towards retirement benefits or separation packages. Those are the buckets that banks are directed to look at in calculating payroll for the purpose of these PPP loan calculations. Once you get your loan, any money that's spent in the 8 weeks after you get your loan on payroll, rent, mortgage interest, and utilities is forgivable. Here's one caveat that was added at the end of last week that was not in the original legislation, and that's this: 75% of those proceeds must be spent on payroll. Why? Because Congress's intent behind this loan program is very clear. They want small business owners across the country to keep employees. And in order to incentivize that, they are going to forgive a significant portion, if not all, of the loan, as long as it's spent the way the government intends and wants you to spend it. Again, I'm going to repeat this. Congress's intent is to create a loan program that helps small business owners keep their employees during this crisis. Here's how loan forgiveness is calculated, and it gets a little tricky, but I'm going to do my best to explain it in as simple a way as possible. Any and all loan proceeds that are spent on eligible purposes in the first 8 weeks after the loan is made are eligible for forgiveness. What are those eligible expenses? Payroll, rent, mortgage interest, and utilities. The amount of the amount of the loan that's forgiven is built around this concept of full-time equivalents, or FTEs, retained per month. And there's still guidance that, believe it or not, as of today, banks are waiting on from the SBA as to how this is going to be calculated. But here's the general understanding based on the guidance that's been given so far, okay? Any decrease in full-time equivalent employees over this 8-week period will proportionally be applied to the forgivable amount of the loan. Full-time equivalence, as I said, is still being defined by the lenders in consultation with guidance by the SBA, but early consensus is that it's going to be based on factors driving the payroll amount. Here's an example that I think helps to make this clear. Let's hypothetically say that you get a PPP loan for $1 million. For those of you who are doing math quickly, that means that your average monthly payroll would be $400,000, right? 400,000 times 2.5 yields a loan amount of $1 million. Let's say that in the 8 weeks after you get that loan, you use all of those proceeds on qualifying expenses, right? So at least 75% has been spent on payroll, and the rest has been spent either on payroll, rent, mortgage interest, or utilities. You would think that the full 100% $1 million loan would be forgiven. However, here's the big asterisk. If you had 20 full-time equivalent employees before this crisis started and now have 10, you're only going to be given 50% of that loan as a forgivable portion, and at the end, you'll be left with a $500,000, principal loan. We'll talk about what the terms of that loan look like in a second. If, however, you maintain all of the full-time equivalent employees that you had prior to this crisis, then the full $1 million would be forgiven and you be left with no loan balance. Whatever loan you're left with, here's what the terms look like. And again, things are moving so fast that the interest rate on these loans has actually changed 3 separate times over the last 7 days. When the legislation first got passed, it was stipulated by Congress that these would be 4% loans. Then the SBA, when they were issuing their regulatory guidelines, changed it to 0.5% loans, 0.5%. As you can imagine, banks went crazy. They said there's no way the economics could work at 0.5%. So the SBA, in consultation with the banking industry, raised it to 1%, and that's where we're at now. So whatever loan you're left with after forgiveness is going to be a 1% fixed interest rate. The term has changed too. It is now a 2-year term. Originally it was a 10-year term, but now you're looking at a 1% fixed rate on a 2-year term. The first 6 months after the loan is issued and the forgiveness is determined is automatically deferred, all principal and interest payments for 6 months. And at that point thereafter, you're looking at a 1% fixed interest rate repayable in 2 years from the time that the loan was forgiven, or at least the forgiveness portion was determined. There's lots of no's that are specific to this loan product that are not common or what we're not used to for the SBA program. Like I said, there's an automatic 6-month deferment period on all principal and interest payments. Here's some things that distinguish the PPP loan from other SBA products. There's no personal guarantee required. There's no collateral required. There's no affiliation or credit elsewhere exclusions typically found in the SBA 7A program. There's no prepayment penalty. That's true of all SBA 7A loans already. No bank fees, no SBA fees. If and when Boefly is back online and accepting applications, there's no Boefly fees. So again, any loan amount that's not part of the forgiveness is a 1% fixed rate on a 2-year term. Here's what you can expect to be required to present to lenders when you apply for these PPP loans. Copy of your driver's license, copy of 12 months processing records. So for example, if you use ADP or some other processing agent for your payroll, that's what a processor record is. Payroll tax filings to verify 12 months of your payroll, like a Form 941. Insurance forms to confirm any expenses that you've paid towards a group insurance plan over the last 12 months as an employer. For an owner draw or a sole proprietor income, you're looking at income and expense statements or some kind of bank records sufficient to verify these payroll-related items. Now, different banks are going to have different requirements. This is kind of like inside baseball, but I'm going to throw some alphabet soup at you for a second. KYC rules, those are know your client rules. Different banks are going to have different requirements, and those different requirements will yield different documentation requirements. Banks have AML rules, anti-money laundering rules. Sorry for the typo there. And then there's the Bank Secrecy Act. The general takeaway is, as everyone knows, the banking industry in this country is heavily regulated. And that's not going to be any different for these PPP loans than other loan products. So be prepared, depending on the bank that issues these loans, that they are going to probably want some additional documentation. We just can't tell what it's going to be yet. Now, like I said at the outset, Boefly has currently turned off its application. Our expectation is that we're going to be coming online again in the next 24 to 48 hours. I will be letting Fiona and Sean know once that is. But if you were to go to the Boefly site right now, we're not taking any additional applications. So if you have a local lender who has already reached out to you, or a local bank that you do your business loan processing with, by all means, connect with them. If they say they could process these PPP loan requests and get you an SBA authorization, God bless them. Move forward with them if you can. If in 24 to 48 hours you're still looking for a lender, that's where Boefly comes in. And my strong expectation is that it's going to be sooner rather than later. Our IT team is working on stabilizing our website so that we can take on more applicants. So if that time comes and you still are not working with any local or other lender, Boefly will try to help you get placed with a lender and streamline your application. I have some other slides in this process, in this presentation, but I want to give people a chance to answer questions. I'll share this presentation, Fiona, with you so that you could then disseminate it if you'd like. But I know that I've already taken a fair amount of time, and I know that we're limited. So if you wanted to open up to questions, I'm happy to answer those that I can.
Absolutely. One question I have already is, could you speak about how agents can lean into the CARES Act as independent contractors? Our broker owners or our franchisees actually have a combo of 1099 employees as well as, employees as well as independent contractors. And I know there is a provision for independent contractors in the CARES Act paychecks.
Sure. So this is another, so this is another area that's actually shifted a lot in the last week since the legislation was passed. Originally, it was thought that small business owners, in calculating their loan amount, right, and calculating the amount that they were eligible for, could include 1099 employees in that loan calculation, right? Employees that were paid via a 1099 form. That has since changed because independent contractors, 1099 folks, can now apply themselves for the PPP loan. That is a new, and I think for this group, probably a very important development. So let me repeat. 1099 independent contractors are now eligible to apply for a PPP loan themselves. It also means that for small business owners that pay independent contractors, those 1099 annual payments are not included for the purpose of calculating these loans. For 1099 folks who are applying, you're going to need your 1099 MISC form.
All right, and what is the calculation like for an independent contractor? Could you just go over that? Because I know there's a cap on that as well.
Sure. So my understanding is that for independent contractors, the loan calculation is similar, up to $100,000 that are paid out on a 1099 form, plus these other benefits as appropriate that you're able to verify through documents over the last 12-month period. But I'm pretty sure it's capped at $100,000 in the same way that loan calculations are based for non-independent contractor applicants.
Excellent. Rob, are you seeing some questions there, or Sean?
Yeah, we do have a number of questions that came in here, so this is a good pause point. David, you had used an example earlier about 20 full-time employees being reduced down to 10, and that equated to a half portion of the loan being forgivable. Is that assuming that all salaries are the same, or are salaries weighted differently? Can you speak to that at all?
Yeah, so I believe I understand the question, and I don't think it's a per employee salary so that all salaries have to match identically. I think it's kind of a grouped amount, but there's one caveat to that. If there's an individual employee who was making a certain amount of money before this crisis started, and during the period up until June 30th, their salary is reduced by more than 25%, that will affect or impact the forgivable amount. Okay, let me repeat that. So in general, in calculating these FTE numbers, I think that the full payment or the full kind of salary portfolio is looked at in mass, with the one caveat that if any employee's salary is lowered by more than 25%, that'll impact the forgivable amount of the loan.
That's helpful. Thank you. Another question that came in here, can we pay a weekly check to a 1099 employee and be covered under either of these programs?
Can you repeat the question, Sean?
I'm sorry. Can they pay a weekly check to a 1099 employee and have that be covered under either of these programs, either the PPP or the disaster relief program?
So I don't know about the EIDL loan, but I suspect that under the PPP loan, that would be totally fine. I'm going to check on that, and I will make sure that the answer to that question is both posted to our FAQ page, and I'll email it to you guys as well. But I can't see anything kind of thematically wrong with that.
Awesome. Let's see what else we have here. A number of questions have funneled in.
Can you apply for the?
I was going to ask, are you using a full-time employee number on that 2/15 date to determine whether you keep the same number during that 8-week period thereafter?
So you actually have two different periods that you're able to elect to compare those FTE numbers. So you could even, once the loan is issued, to make that comparison, you can either look back to the period from February 15th to June 30th in 2019, or you can look back to the period from January 1st to February 29th of 2020. The borrower gets to elect which period they want to use for the purpose of making that FTE comparison.
Got it. Is E&O insurance included under this plan?
Can you repeat the question?
Is E&O insurance, errors and omissions insurance, included under this plan?
I don't know. I don't know the answer to that. If you could actually, Sean or Fiona, if you could email that question to me, I'll do my best to get an answer. Also, I saw Rob was asking a question about can you apply? I'm guessing it was, can you apply both for an EIDL loan and a PPP loan? Yep. So the answer is yes, you can. Also, there is a $10,000 advance on an EIDL loan that's fully forgivable. So if you've already applied for an EIDL loan and you were denied, apply again because you still might be eligible for that $10,000 advance. Here's one catch about applying for both. You absolutely can, but you cannot use loan proceeds from both towards the same purpose. So for example, you can't use an EIDL loan to pay June payroll and also use a PPP loan to pay it. But as long as you're using the loan proceeds for different purposes, so let's say you want to use an EIDL loan for some working capital costs and the PPP loan to pay your payroll, totally fine.
Got it. Do you have to be a corporation, or are these available for sole proprietorships as well?
Absolutely, great question. I'm sorry for not addressing that. You absolutely do not need to be a corporation. You can be a sole proprietor, you could be an LLC, you could be an S Corp, a C Corp, any entity is eligible for this. You could be a nonprofit, actually.
Great. This is awesome. The questions keep funneling in here from Christopher Kelly. The document list that you had alluded to, David, is this prior to getting the loan or proof after you've taken the loan?
So it's prior to getting the loan. It'll be part of the application process. Banks will need these documents in order to process the loan. Once the loan is issued and you're then using it in that 8-week period, to be eligible for forgiveness, you're going to need to verify how you used it. So there'll be other documents once the loan is issued that you'll need to funnel back to the bank, or I should say to the SBA through your lender, in order to qualify for forgiveness. And no, I'm not exactly sure what those documents are yet, but it's documents to verify that the money was spent on an eligible expense: rent, mortgage interest, utilities, and payroll.
Got it. We have another one that came in here. 1099 agents that have their own LLCs or S Corp set up, how would this work? For example, if their total income paid to them from their own LLC or S Corp is $100,000, how do owners draw on one's work? Can we as owners max out our draw at 100K and not use the monthly 2.5% calculation?
So I'm not sure I'm not sure I understand the question, but I think I do. I think it's if you are a 1099 employee, but also have an LLC formed, and that's kind of almost how you're paying yourself. Is it like that?
That's what I'm reading
Yeah.
this as.
I think it is. And I mean, I can't answer that question, that technical question specifically, but I will answer it kind of thematically, which is this. Every bank, the SBA, they want to make sure that this loan is issued consistent with their expectations of why this program was created. Obviously, like any other loan product, they're going to be on high alert for fraud. So I think in that example, not that that was a fraudulent example, but I think as long as you're not duplicating payments through two loan requests, then I think you're fine. So on that number, on that $100,000 number, it would be $100,000 for the year. Remember that, divided by 12 to get your average monthly payroll, multiplied by 2.5. Whether you're doing it with the EIN from your LLC or as your 1099 is probably somewhat irrelevant, because I think it's going to yield the same loan amount.
Okay. Okay. Note from Kathy Martello here. Can we use more than 75% towards payroll?
Can and should, absolutely. Oh my God, yeah, if you're doing that, the government's gonna love you. Then you're doing exactly what they want. Listen, they want you to use 100%. Think about it. It is the absolute #1 priority of the US government, of Congress, to keep as many Americans employed as possible, right? So if you want to use more than 75% on payroll, you are an absolute winner in the eyes of the government and probably all those people who you're paying as well.
Awesome. Glad we got that cleared up. Another good question here from Michael. Given that the funds are dispersed from the lender on a first come, first serve basis, and there seems to be a little bit of a delay, is there any reason that we couldn't apply with multiple lenders?
No, great question, and it's a question that we're getting a lot, but let me just calm some nerves that we've been hearing about. There's $349 billion authorized. If by the end of today, $9 billion have been approved and applied for, that's still an incredibly small percentage of the full amount. So I don't have any fears personally that this amount is going to run out anytime soon. Also, there's been a lot of chatter on Capitol Hill that if it did, everyone in Congress on both sides of the aisle is fully prepared to reauthorize for additional funds, right? They want the 30 million small business owners in America to get the money they need to keep people employed. But the answer to that question is yes, you can apply with multiple lenders. The dispositive number, the thing that locks you in with a lender is not an application, it's not their processing, it's something called an E-Tran number. So the way the SBA system works is that the SBA takes their applications, they submit them to E-Tran, they submit them to the SBA through E-Tran, and once there's an E-Tran authorization, then you're locked in with that bank, and the question just becomes, when do you get your money?
Following. Good question there. Another question that came through that I think is really beneficial here. On the PPP application, there's a question that asks if they're a part of a franchise system. Can you speak to that a little bit? What's the reasoning behind that?
So I think it's a yes. It's just a question on a universal PPP app. Franchisees and non-franchisees alike are eligible. So I don't think there's any impact on eligibility. I think they're just trying to collect that information for their kind of data reporting. It may have an impact with the particular lender. So for example, if I'm Bank A in California, I might say to my credit committee might say, we're willing to do $500 million of these PPP loans, but we don't want to do more than 50% of that with one singular concept. So it may be for banks to collect that information to make that determination consistent with their credit committee. But there's no overarching kind of global rule about eligibility as it relates to your franchise or non-franchise status.
Okay, so it's not a deterrent or seen as a deterrent or anything like that.
Not at all.
That's good info. Perfect. Hey Fiona, the questions are continuing to funnel in here. Do we want to continue to run through these? Do you want me to grab some of these and circle back? I know we have Steve Murray on as well. How would we like to move forward here? Can't hear you.
Can't hear you.
Sorry. Yeah, I'm noticing that we are in a bit of a time crunch, and I promised to David, because they have been hit so hard, that we would stick really on time with him. So, look, excellent presentation. Thank you so very much for coming and providing this really comprehensive explanation as to the CARES Act as it relates to specifically, of course, the paychecks, which is, of course, what everybody wants to know about right now. What we'd love to do is we'll continue to send your questions in. We will accumulate those questions, and then we will circulate a document of answers back to you. That's for everybody that's participating in the webinar. And then we can be respectful of David's time. David, thank you so very much for everything, for the time you spent with us. Yes.
Fiona, just real quick, I have had one question come in numerous times that I would just like to address really fast. I think it will be a quick one, but it has come through multiple times. Does this loan impact an agent's ability to collect unemployment?
Yes. So you can't collect unemployment under certain federal programs at the same time as collecting the PPP loan. Basically, you can't serve two purposes with the same money, with those two different, I want to say loan products, but two different sources of income. If you go to the Boefly FAQ page, there's information about that, and I'll share that page with Fiona afterwards so that you can provide it. There's a really significant and robust amount of FAQs on our FAQ page. It's ever changing as we get more information. We're constantly updating and expanding it. So that'll be a really useful resource. Even though you can't currently apply through our site, you certainly can access the FAQ page, and I'll share that with Fiona to share.
That sounds wonderful. Thank you, David.
All right, thank you guys so much.